I only want to raise a bond for, say, 800,000.
Okay.
And the property is worth a lot more than that.
Yes. Yes.
But I want the business to actually pay the bond, which is why I want to raise it in the bond's name. Otherwise, I can just do a loan account and transfer it into the property company. But I want to just get some money out,
Right.
because I'm developing another property, which I want that money for to develop the other property. I'm willing to sign. Both my wife and I are willing to sign surety against this. So if we raise a bond in the property company's name, we're willing to sign surety. So yeah, it's complicated. I don't know how to get the bond raised because of the fact that the financials are a loss, and that seems to be an issue with the people. I approached enterprise banking, which is where the business holds its account.
Yes.
And they said no, but they don't do residential properties, they only do commercial properties.
Yes.
So they passed me on to my private banker, and my private banker doesn't seem to be the brightest kid on the block. And I suppose because I'm trying to finance a property in a company's name, he's now saying, but he's a private banker, so he can't, so he doesn't seem to understand it clearly.
Yeah, it is difficult to go that route. Okay, so, and you receive a month-to-month pay slip, and that gets paid into your personal account.
I can give you all of that. I can give you my RP5s, gets paid into my personal account.
Brilliant. Okay, so that's great.
So from an affordability point of view, my personal capacity, there won't be an issue.
Yes. It's just, so now I'm going to go backtrack quickly to the transferring of ownership of the Cape Town property from your personal names into the business. Okay. Have you drawn up a sale agreement? Or
not yet, no.
Not yet, okay.
No.
So essentially what I propose is that a sale agreement be drawn up between yourselves.
Yes.
Right? Just your own DOS, deed of sale.
We did exactly the same with the other two properties. The only difference is I didn't raise a bond on those two properties.
It was just a transfer.
Account.
Okay.
Yeah, I just did a loan account, so the company owes me the money.
Okay. Same concept applies. It will just have a mortgage bond clause now added, subject to bond approval, right? Now, the bond approval, we can raise the 800, it's not a problem, but then the transfer attorneys will need guarantees for the difference so that they can effectively do the transfer. Or we can raise the full bond of up to the full purchase price because your affordability is fine. And then all you do is you literally just take whatever excess that you're going to get paid out and pay that into the access bond, and then you just take out what you need as and when you need it. So we essentially raise an access facility on this whole transfer, go up to the full purchase price, up to the 2.5, you take out as and what you need and only pay on as and what you use.
The only thing that comes to mind now is if I raise for the full 2.5, I'm paying transfer fees for 2.5. I don't really want to have access to the difference. I just want to raise 800,000. I don't need the rest of the money.
Yeah, no, that I agree with. What the only thing is, the issue there is that when they have to do a transfer duty clearance, because it's still a transfer, okay?
Right.
So when they trigger the transfer, you see, this is something that's besides my finance raising process. Just a disclaimer here. I'm just foreseeing and preempting what will take place with SARS at the transfer attorney's office. So if we do a purchase price of 800K, this is what may be flagged. When we submit it and they see, the sale or the sellers are also, they're the one in the same, right? The sellers are the same as the buyers essentially, because it's just an entity that separates them. If that line is drawn with SARS, whoever issues the clearance, they could throw it out and say, no, duties need to be charged on the current market value. Give us two independent current market value reports, not the bank's one that we secure. It will be from like estate agencies.
Okay.
So just the
So
FYI.
it may be inevitable that I'd have to pay that anyway.
You may need to. You may
In
need to.
which case,
We could just raise the bond on your personal names. Or you could do it cash.
yeah. But if I raise it in there's no point in raising it in my personal capacity. I just settled the property. I wanted the payment to go through the business. That's why I wanted to raise a bond.
To offset.
Because otherwise I can't claim the interest and
correct.
everything from an expense point of view.
Correct.
And I want the asset to lie in the property.
Yes, 100%.
In the property company.
100%, yeah.
Okay, so my only risk here really, well, there's two risks, I suppose, is the duties, and that SARS might come back and say, well, there's capital gains. And where are you based?
I'm based in Cape Town, actually, in De Waterkant. Our offices are here, but we see to clients all over SA, even globally. So yeah.
Okay. No, that's fantastic. Thank you very much.
You're welcome. Look forward to assisting you. That was a very interesting conversation and very complex conversation had with this particular client. He has a property portfolio that is, making a good amount of money. It's turning over a healthy profit on a month-to-month basis. However, due to the investments that the company is making in new property ventures, they are running on paper at a loss. And so that business cannot be, used to identify a profit in it in order to qualify for a home loan. However, even though this is the holding company, what the bankers failed to mention to the client is that because his salary as a salaried permanent chief executive officer of a different company is sufficient to afford the loan he's asking for, the fact that the business is technically running at a loss on paper can be offset. That loss can be offset by the fact that he's earning sufficient income outside of the business. So this is where we are able to draw that line. So yes, the financials will be provided, but it's purely, we will motivate the fact that it's purely there as a holding company. It's not to support the repayment of the home loan. And so we will make sure that motivation is properly, put through to the credit managers that we work with closely.